You're right, guys, it's good to be back in front of the screen and bringing you guys another market watch list. Unfortunately, I haven't done one of these for the past few weeks. However, I'm going to try and get back into it now. I'm going to get back into it now and make sure to bring one out to you guys every week, as I found it does improve my trading, and hopefully for the few people that do watch, it does improve yours as well. So as always, we're going to start off on the DXY, and then we can use this to help forecast various other US dollar pairs. So starting out on the weekly, and you can see this lovely shooting star here. As price did approach the 100 key level, we have violently rejected this level. So how we can use this to translate into all the US dollar pairs is that we are expecting the retracement on this, which then can translate into the US dollar pairs weakening, and then we can potentially buy retracements after the very extended period of buying of the US dollar, which can help us catch those retracements, as there's nothing wrong with buying or selling retracements as long as you have a trading plan and a strategy that fits that. So where are the potential areas where this could retrace into to then see further upside? You've got the 38.2, which we know is a very reliable level after strong impulsive moves to the upside. As you can see, we've had pretty much constant buying on this pair since the 3rd of Feb. So the 38.2 is the first immediate level. Then after that, you've got this kind of market structure here let me just move the fib. You've got this market structure level here, which we could extend to there, which lines up with 61.8, which is around the golden pocket, which is quite a high area in terms of reversals. And then this is an example of how you use the DXY, which obviously we can't trade, into actual useful intel for the Euro US dollar pair. So they tend to be quite inversely correlated. As you can see, we had a violent rejection on the DXY around here, and inversely correlated, this is at the bottom of the trend, so we can see a nice bullish hammer candle formed on the weekly. You want to start off on the weekly because now we have this we have an extra additional confidence in terms of our directional bias, because the previous week has closed. It's valuable information that we need, and then we can use that to help form our bias for the coming weeks or so. So what this says to me right now is we're going to be catching a retracement on this pair, which is very long overdue after the 2 solid weeks of selling, with the US dollar absolutely slamming the euro. And then as we work our way down the time frames, we're now on daily, and we can clearly see this bullish engulfing on Friday after a few days of correction. There wasn't really much movement in this pair, as it was very oversold, and obviously the DXY was getting up to that 100 psychological and very key level, and it wasn't really sure where it was going to go. And now we can see, hopefully, that we're going to see a retracement on the DXY and on the Euro too. So all I'm looking for in terms of getting in for a long on this pair is just now a retracement after we broke out of this descending trend line. I'm waiting for a retracement into this level of market structure and the 50% fib. They're around 80 to 110 pips on offer, depending on which area we retrace into. Do we retrace into the 50% fib, which as you can see here with the market structure, or do we retrace into the 61.8? There is very much a possibility, if we do see the euro strength come back in, that we may not even jump into these areas. We might carry on going to the upside, which is obviously then beneficial because we're gaining a lot better percentage on our trade. But there's nothing to say we'll get a nice little rejection from this area into here and then continue going lower. And even if that is the case, you've made a nice 110, 120 pips, which is a great start to your week. Again, on a similar thought, we're looking at euro retracements. So as you'll see on a lot of the euro pairs, they are in extended selling periods due to the reasons mentioned. We've had weak euro data constantly in terms of economic data. And here's another opportunity on euro Swiss franc. And we now finally have had a third touch of this support area, where we've seen prices rejected once, twice, and now potentially a third time. And this level has basically held since around 2015, so around 5 years now. So we can see on the week, and this is why we use the weekly, as we can pick out these key levels where price may reverse. And then on the daily, you can see we've had this strong impulse followed by this week of corrective price action. And price, that usually tends to mean price is gearing up for either a sharp move to the downside to carry on the trend, or with the conferences that we've got so far, we can look at the directional bias of maybe it's gearing up for a trip to the upside. And then as we continue to move down these lower time frames, we're looking to build those extra confidences in and looking for the patterns that are going to allow us to get into this trade, that are going to give us the extra confidence that, you know what, this trend is changing. And we've got this, what is looking like anyway on the 4 hour, we've got this falling wedge pattern, which if you know your patterns, which you should, then it is a bullish reversal signal. As you can see, price is getting squeezed and squeezed and squeezed. So all I'm looking for now is a breakout from this level, not to that extent, breakout from this level, break above this here, which is the last previous high, and maybe even the clear last previous high on the 4 hour, as that is only an extra 10 to 15 pips extra, and then catch the retracement around here, and then take it to the upside. This could be one that is a very clean trade for the week, especially if we do see Euro US dollar develop the way that I mentioned previously. Back over to the US dollar pairs, and now we've got Euro. Now we've got US dollar yen, and we saw this pair make quite a bullish move towards the back end of last week, as we saw the reports that the coronavirus has potentially jumped into Tokyo in Japan, therefore obviously weakening the yen, which is a bit of a difficult situation, as we've seen that the yen is a safe haven. So usually when news like that comes out, especially in Asia, in terms of uncertainty, then we see the yen strengthen. The price is almost forming this pennant as a result of this long-term downtrend that we saw towards end of 2015 and the start of 2016. So all that's happened here is we've seen price trying to poke its head above this long-term descending trend line. Didn't really break through with much conviction. As we saw with the DXY, it was a similar story, tried to break through levels we haven't been past for a long time, and we saw a rejection of that. So this is pretty much a textbook setup. All I'm looking for here is a solid retracement around 120 pips into the 50% fib, taken from this low to this high. And as you can see, we've got this nice bit of market structure, which adds an additional confluence. And then we have the daily 50 as well. And when I say textbook, this is the kind of trade I take time and time again, and I'm constantly looking out for. Aussie yen, CAD yen, Euro yen, and US dollar yen, around 80 to 120 pips from key areas where I'd be interested in taking a position in those pairs, which can almost be used as another confluence because they are so closely correlated. So on USD JPY, I mentioned that a few of the yen pairs are around 80 to 120 pips away from being in key areas of interest, and this is exactly the same on Euro Japanese yen. So what we've seen here is we've seen, after, as I mentioned previously, the euro getting absolutely battered, we've seen some relief, especially against the yen in the past week or so, and we've taken out the most recent swing high on the 4 hour. As you can see, it has been partially, but we have taken it out. So we can now say that the bearish trend, especially on the intraday timeframes, has been invalidated. So all we're waiting for now is a retracement into one of our key areas of interest. So you can see we have two key areas. You can see on the 38.2, so see price correctively come down into the 38.2 and then go up to the minus 27%, which we can see lines up with this top-up structure here. We might even go towards where the impulse started back in January. Or what we could also see is price retrace further, break below the 4 hour 50, because by the time price gets to here, we will be below the 4 hour 50. Touch the 50% fib, clear market structure and liquidity zone here, and then go from there. Obviously, the 50% one is more attractive, as we do get a better risk to reward than the 38.2. However, the 38.2 has the additional confluence of the 4 hour 50 EMA, which will be where price will be around the 38.2 at a similar time. So on every market watch list, I like to put in a wild card pair, if you like. A pair that I might not trade too often, but it looks good for a potential setup as the technicals are there. And I like to put it out to you guys, as you guys might trade different pairs to me. And it just shows that whatever analysis and technical analysis that you have, it can be used across a multitude of pairs. So very similar to what we've seen on Euro Swissy in terms of this pair being very low in the charts. It is New Zealand CAD for reference. And we've seen the third strong rejection of this level, We had one in August in 2019, one in the 8th of November in 2019, and this clear one now on the daily with this spinning top from Friday last week. And that signals indecision, and you can see we've had quite a violent rejection from this level. So what I'm looking for now is, as I go down the time frames, an entry that will meet our requirements that will allow me to take advantage of this counter trade trend. Counter trend trade, not counter trade trend. So this isn't yet complete, as we haven't currently broke above this descending trend line. So if we do see price break out of this descending trend line, and for argument's sake, let's just say where I place a 0% fib, this is what I'd be looking for. If when price retraces in this area from here, looking for the retracement, which will be the retest of this descending trend line into one of the fib levels, and we've got a nice little zone of market structure, as you can see here. We just pop that there, and then take this to the upside. First targeting around here, around the minus 27% or the minus 61%, and then targeting the start of the impulse, which would also kind of line up with this descending trend line here. This isn't my favourite setup for this week, but I just wanted to put something a bit different to show people that you can trade with more than one style. Trade with a style that particularly suits you, but you need to adapt to where the market's at. I like to be trend continuation, and sometimes the cleanest opportunities aren't always there, so this is another one that I do use. These videos are going to become a lot more frequent on my channel now, especially with other content coming out over the next few weeks. Don't forget to check out my Instagram and Facebook for my personal posts, trading posts, and self-development posts throughout the week, and sometimes maybe even a bit of powerlifting that might be featuring soon here on this channel. But as always, thank you very much, and I'll catch you all next time.